Welcome friends. In this session, we are going to discuss important concepts and definitions under the Income Tax Act 1961. As per Section 14 of the Income Tax Act 1961, all the incomes are classified into the following five heads. Here are the titles of the head. First title is income from salary. Second one is income from house property. Third one is profit and gains of business and profession. Fourth one is income from capital gains. And last one is income from other sources. So basically, income received by person is categorized into these five categories, and accordingly tax is charged or income tax is charged on the income received by a person. Here you can see if person is a salaried person, his or her income is categorized as income from salary. Okay. Similarly, if person has house property and from house property, if person is earning something, then in that case, that income is categorized as income from house property. And for businessmen and professionals like chartered accountant, doctors, lawyers, separate title is there, and the title head of the title is profit and gains of business and professions. Okay. And if person is earning by dealing in the assets like shares, debentures, or gold, or physical assets like land and building, in that case, if income is earned, that income is categorized as income from capital gains. And if the income is not categorized into first four categories, and if still person is earning, in that case there is a separate title known as income from other sources. Okay, so basically income received by a person is categorized into these five categories. Now see, if you are a student or if you want to know more about the income tax, in that case this session is going to be very useful for you, because see, this is the first lecture in the series, because on the income tax act or on the concepts of income tax, we are going to have a separate lecture series, and this is the first lecture in that series. So make sure that you have subscribed our channel and like our videos and share it with your friends. Okay, so as per Income Tax Act 1961, these are the five heads of income. Now let us understand the meaning of income tax. Okay, so as the title itself says that it is a tax on income. Okay, so income tax is a tax on income, and it is charged on the income earned in a previous year. Whatever income earned by the person in previous year is charged in the current year. See, now the month is March. Okay, after 31st March, we know that we will have a next financial year. Okay, so in April 2023, if I want to check my eligibility or my if I want to check my tax liability, in that case, income earned during the current financial year, that is financial year 2020 to 2023. Okay, this is the current financial year. To be precise, 1st April 2022 to 31st March 2023. This is the current financial year. So income earned in this financial year is taxed in next year. Okay, and here in income tax, the terms are used that assessment year and previous year. Okay, so if I am going to pay the income tax in April for the income earned in this year, in that year the terms are used that previous year, this is for current financial year, and year in which my income is assessed for tax, that year is known as assessment year. Okay, so we are going to discuss about all these terms in the coming lecture. Okay, so basically income tax is a tax on income. It is charged on the income earned in the previous year, and the rate of income tax are prescribed in the Finance Act every year. Okay, so Finance Act is passed in the Parliament, and in rate of income tax are declared there. And the Finance Act is passed by the Parliament every year, and that Finance Act is popularly known as budget. you must have heard about this term, that is budget. So budget is nothing but the finance act in which the income tax rates and all the amendments related to the income tax act 1961 are made in the finance act itself. Okay, the rate of income tax are progressive. It means tax increases with the rise in income. See, the income tax rates are progressive in nature. It means if you have a low income, in that case you have to pay less taxes. So you know that up to a certain limit there is a no tax. Certain income is tax free in India. Okay, so we know that up to this financial year, income up to 5 lakh is tax free. So if the person's income is less than 5 lakh, it means there is no need to pay tax. Okay, and yeah, as income increases, the tax rate also increases. Okay, so we know that for 5 lakh to 7.5 lakh, there is a 10% tax rate. Then from 7 lakh 5,000 to 10 lakh, there is a 20% tax rate. So as income increases, tax rate also increases. Okay, so the rate of income tax are progressive. It means it increases.